Okay, everyone, welcome back. This is PK from the Black Box. Okay, so let's start our today's talk. So, as you can see, this is BTC, ETC, USD, Bitcoin. So I was waiting for the breakout to happen, but as you can see, this could have been a great trade. I was late, and I am annoyed. I am very annoyed. This kind of opportunity, it is just amazing. We measure the TP, as you can see it hit TP2, and look what it did. It reversed direction. It's amazing. It's crazy. And if you want to measure the TP in the other way, you can put it here, and I just measured the height. And now look at this. This is where you would normally get out, not this TP1, not this the Fibonacci. Most of the time, this one, the height, is the one that will be hit by the market, right? So you could be out exactly at 41 sharp, at 41, and leave the rest. Okay, leave the other 70% run. I already told you, if you know the channel, the black box, if you follow me, you know that 70% of our trade will be out when our first TP is hit, right? Our first TP is hit. The TP will be whichever is higher. If you are measuring with a Fibonacci, and or if you are measuring with the height of this consolidation, you will be selecting which is higher because you want higher profit, right? And I already told you that to minimize your risk, once you are in profit, you have to minimize, you have to reduce your profit. Okay, get out. 70% will be out of the trade, right? And the other thing is to trail your stops. Okay, let's assume that you have entered the trade as soon as this breaks. Okay, the market broke this consolidation by this candle, right? So you would have entered right there, but made a wick, right? A wick. This is a rejection, and wicks are filled, and as you can see, it filled it again. So you could have entered there, and whichever is higher, right? The height is higher than the Fibonacci TP1. If you want, you can get out of the Fibonacci TP1, 70% out, but I advise you to wait for the TP to be hit, the exact TP, this one. If in other ways, the Fibonacci could be higher than this height. Okay, if that happens, then the Fibonacci will be the point where the Fibonacci ended, where the TP1 of the Fibonacci is located. That is where you have to get out. 70% of your trade will be out there, and you are in profit. You will not retrace the stop loss. Okay, the stop loss, do not touch it. The other 30%, let it run. Do not touch the stop loss. If you are very strict, just trail your stop loss, but make it very wide. You have to make it very wide because, as you can see, the market is making lower lows and lower highs, and higher lows and higher highs. It does not move in a straight line. So if you put it down here too close where the market is right now, you would get out of the trade before the market finishes its move. Who knows, this move can reach TP3, even TP4. Okay, who knows, this thing could reach TP3, right? There is a high probability it could reach TP3. So it could wipe out these highs and fill this wick right there. Okay, I already told you that wicks are going to be filled. Wicks are like voids, they are gaps, they are imbalances, so they have to be filled, they have to be covered by a big candle, okay, a big engulfing candle. So that is a trade on Bitcoin, dollar, BTC USD. Right here, I was waiting for the breakout to happen. Honestly, I was waiting. I was assuming that it would break to the upside. Okay, it would break to upside because Bitcoin was surging hard, and it was surging, mm, going fast into 50k. Okay, it was real close. As you can see, it is 49,000 USD now. A single BTC is worth 49,000 on January 24th. Okay, but now it is 41,000 right here. Okay, so I was assuming that it could go up and fill this gap. As you can see it, this the wick, I'm sorry, this wick, but that didn't happen. What it did was it broke down. It broke down. As you can see, this is what model is this? This is the fourth model. Okay, the fourth model is very rare. I told you. If you didn't watch my previous video about the topic, says I found the holy grail of trading strategy. Okay, I found the holy grail trading strategy that makes you profit every time you enter the market. Okay, and with proof. Okay, that is the title, so you can go ahead and watch it on YouTube. Okay, on YouTube. So before we would not worry about anything because it will not touch that thing. It will not even get closer to this higher band. That's not gonna happen. Okay, that is the fourth model in play. I can show you everywhere. I can show you everywhere. Yeah, okay, let's finish this one and I'll show you the other ones. That is where you'll be cautious. That is where your trade setup begins. Okay, you make, when you see consolidation, one other thing is the candles should be the candles should be three or more candles. You have to wait for three or more candles to form. Okay, on whatever time frame you are. If you are on the 3 hour time frame, that 3 hour time frame should show you three candles. If you are on the 4 hour time frame, that 4 hour time frame should show you three candles or more. Okay, if it is more, if more candles are stacking up against stacking in a row, that means you are in a good situation. You are in a good situation. That trade will be successful, and that trade will give you a lot of profit, a lot and a lot of profit. Okay, the pips the market moves is directly proportional to the consolidation. As you can see, this consolidation was responsible for this attack, for this breakdown to the downside. After unleashing this power, it reversed direction and again unleashed another power to the upside. Just because of this consolidation, this whole time it compressed. Now it is time to release this energy, right? It released the energy in both ways. That is a double fake out. I already told you that double fake outs end up reversing back to where they first broke out. Okay, where they first broke the market, because that most likely will be the first direction is most likely it will be made a week. It is a week. Okay, it forms a week, and I already told you that weeks are filled. Weeks are filled almost instantly. As you can see, after seeing that, I was annoyed. I was annoyed very much. There was no alarm system. I was at work and I didn't see this breakdown. If there was any alarm system, if my phone was ringing, or if I got an SMS that when this thing started to break out of this consolidation, I could have entered and made a lot of money from this move alone. From this move alone. When it breaks to the upside, I will also enter a buy because I know my setup. I already told you the black box has 4 models. You got there is nothing that will happen beyond because you don't want to get caught up by the market movements. The market most likely cannot break out of this consolidation if it breaks down before reaching that TP. After it reaches the first TP, it could retrace back. That we don't care. We don't give a shit. We don't give a damn if it retraces because our 70% is out. I already told you that our 70% is out. According to the Fibonacci, we are out exactly right there. Exactly right there, right? Let me zoom in. We could be out exactly right there according to the Fibonacci, okay? There. It is too close, so I don't want to get out of the trade yet. You could say that and wait for this TP to be. Let me make it closer. So this is the exact TP that you need to be aware of, okay? The height of this consolidation determines the TP. Okay, this TP is exactly at 46,000. At 46,000, and majority of your trade will be out, and your 30% would run. Okay, your 30% would run, and you let whatever the market does. Okay, if you are strict, you can just trail your stops. Okay, follow the market and trail your stops. Not too close, not too close. Do not put it too close because you will miss out on big trends, big moves. Okay, so as you can see, this unfortunately ended up being it retraced back. So if you had trailed your stops, you wouldn't worry, because that is why I am telling you that if you employ both risk management, both uh, risk management, like trailing your stops, and the second one is getting out of the trade when TP1 is hit, or the first TP is hit. You are not getting out of the trade, you are partially getting out. You are pocketing 70% of your profit and letting the other 30% run. Let's just say you entered a one lot trade on this BTC USDT, I'm sorry, it's USDT, on Bitcoin USDT, right? So you would get out, you would grab that 70% or 0.7 lot would be out of the trade when your TP is hit. Your TP is exactly at 46,000. You entered exactly at 46 and 500, at 46 and 520, and you get out at 46,000 because you sold it, so the numbers decrease, right? So that's a 0.7 lot would be out. You are in profit. Okay, there is nothing to worry. The other risk management comes into play. What is that? You trail your stops. At least make it equal to where you entered. Okay, where you entered. Put your stop loss where you entered the trade, so that whatever the market does, you don't care. You don't care. That's not your business. That's not your business. Okay, that is a smart way of maximizing your profit while the market is against, or while the market's condition is unknown. It is unknown, right? You don't know what's gonna happen next, so you gotta be prepared to defend yourself in both ways, in the winning and in the losing. okay, in the losing ways. So the story goes that after missing this trade, the market consolidated. So I thought that this is the third model in play. Okay, this could be the third model in play because the third model will be in play when the upper band is broken to the upside. So the market did that and I immediately entered the trade. Immediately. And put my stops up there, exactly right there. And I forgot about it. I forgot about it. I put my stops down here. I put my TP up there and I forgot about it. And I went into my business. When I returned back, when I checked my phone, my TP, right? So in this case, it broke the downside. So the market ended up coming back to the downside. So that is right here. We had some consolidation right here. If you see it on the monthly, you could easily see it, but on the weekly, it is very, very faint and it is not readable because there is a lot of trends. Okay, we don't want trend, we want consolidations. Just like this one, this could have been a great buy. It's beautiful. It is beautiful. It's just amazing. Look at this. Okay, first let me show you this one. Let me show you this one. So as you can see, what do you see here? A consolidation, right? So what do we want from this? We want a break. We want a break. We don't care which direction it breaks. That's not our business. We don't even care. We don't want to know the direction. We don't care Bitcoin if Bitcoin reaches $1 million. We don't care if Bitcoin reaches $20. That's not our business. Our business is identifying the consolidation. Where did the market stop? Where did... Let me just use this thing to the downside. That is 3,000. Oh man, I can't see it. I'm sorry. Okay, let me zoom in here. Okay, let me zoom in a little bit. Let me zoom in from here to here. Let me show you. Where is shift? So to bring this to measuring pips, the pip measuring tool on TradingView, just hold the shift and click wherever you want, wherever point you want to measure the market, right? So we broke up there, right? We broke up there. So the pips are, the points are, you go down, that is 4,000. That's 4,285 points. Selling just because you found a consolidation. You found a consolidation. 1, we got 2, we got 3, we got 4. Finally broke the downside, right? We broke it. That is a nice sell right here until down here. Okay. So in this case, it didn't hit our TP. I think did it hit our TP? Let's measure this one here and put it up there, right? So just like this. Come on, man, don't cover it. So let's put it right there. No, it didn't. No, it didn't. It didn't hit our TP. It was too close. It was close, close. That's why I'm telling you to employ both things. One thing is trailing your stop. Trailing your stop. At least put it where you entered the market or above. Okay. So if the market retraces, even if it retraces back against you, you are in profit because your TP is in profit. You placed your TP so as you are in profit, so as you can be in profit, right? So that is the first model. The first model in play. Then what happened next is the third model. The third model is in action right now, even on the monthly time frame. It is crazy. When I see these kinds of things, I enter a buy. As soon as this market breaks this high, this upper high, as soon as this market breaks this upper high, you are entering a buy. You are entering a buy, and the market will not look back. The market will not look back. It will snap like it another direction, another position, right? So what is happening right here? So that is happening right here. So the first model, real breakout, then the third model, that is single breakout. I mean single fake out. I'm sorry, and then you enter a buy. You enter the sell. You trail your stops. Beautiful trade. Some people are not patient, so when they are in profit, when the market is around here, they could get out instantly. Oh man, my money is huge, man. I don't want any more money. What if it retraces? What if it hits me? What if it eats me? So they have some kind of gut feeling that the market could retrace back, and they are right at this time, because after they were in profit, what did it do? It made the typical doji. Dojis are show indecision. Dojis show you indecision, which means this direction is not equal highs up there, and the market went and smashed those equal highs and drove down. That reminds me of ICT, right? So target the equal highs and the equal lows, and those are the targets. Those will determine your daily bias, your daily direction. I miss that day. I miss that period when I used to watch his videos. He is a great man. Don't get me wrong. He's a great man, and he has decoded most of the market enigma, right? The market mystery, right? So that, I respect him. I respect him. A lot of people are, eh, I mean, he is talking about the same thing, giving it another name, something else. Ah, no, he did it. He did it. There are some new concepts I didn't hear anywhere else. Anywhere else. Okay, I have learned a lot from him, so I respect him. So that's great. Okay. So, anyways, this is what I want to show you right here. Another one, right? So right here, what do you see? So you drag your you drag your you drag your box, your black box, right? That's it, your black box. These are supposed to work all the time. They will not work all the time. They just make your going. I mean, I have spent years. I don't know, 2 years, 2 years or 3 years. I have been trading for 5 years, and I spent almost 3 years figuring out the best indicator, the magic indicator that could give me signals right when the price reverses, right when the move starts, that big move. I want that big move, okay? And the RSI, when it reaches the overbought position, I will get there and I will ride it down to the oversold position. Man, that's not gonna happen. That is 1 in 100. And there are a lot of bumps around the road. And that will not, that, man, I don't want to talk about these indicators. Indicators are the worst. I don't need them. I have talked about a couple of them on my channel. You can see it on YouTube if you happen to scroll through my YouTube channel. You can see some couple of indicators that I used in the past year, but now I don't pass around their homes. around where they are saturated, where they are situated. All of the people who tell you that indicators work and they tell you that I have found the magic indicator that gives you 100% win rate. Man, that thing is real as a scam. It is a scam. It is what, what can I say? They are telling you that so as to make money. They are making money off of you. They are not making money on the markets. They don't know how to trade, man. They don't know how to trade. Some of them even took it further. Some of them, they rent Lamborghinis, they rent mansions, they rent villas. They ask the homeowners, please give me some 3 minutes. I have a YouTube channel that I want to inspire people. I have 100K followers, and your mansions, your villa is beautiful, and I want to inspire them, motivate them. Please, I'm begging you, please. And what can you say? What can you say? Just do it, okay? So all I am saying is that don't believe those gurus that are blabbering around and blabbering about anything. They are on YouTube or on TikTok, wherever they are fake as fuck. And you don't wanna watch all day and spend all day, but you don't want to lift a single finger to change your life around. Because you got addicted. You are addicted. You are addicted watching these people. And you didn't see the outside world. If you had took action, you would know what I'm talking about. It takes a lot of time. It takes a lot of effort. It takes a lot of mental energy, physical energy, emotional energy spent to bring that wealth around, to bring that lifestyle. You are seeing them on their best day. 90% of the time they are working their ass off. They are working hard, and you don't even see them because they don't want to share their worst moments. No one want to share their weakest side, their weak side. No one. Why would they share that they are weak? That just humbles them. That makes them less. That makes them small, right? So everyone is flexing that I got this car. Come with me. We are buying G-Wagon. Man, that money that is used to buy that G-Wagon took 10 years. 10 years of saving. Okay? If it is not the money that is saved, let's just say they spent years and years studying. They spent years and years testing that product, if they are in e-commerce or drop shipping or anything else. They have spent years and years improving themselves, right? Figuring out how things work, figuring out how money works. And you want instant gratification. That is not gonna happen. I will tell you that that's not gonna happen. Okay. Anyways, Bitcoin. I lost Bitcoin for a while, so let's just get back to the weekly time frame. That's where I want to tell you things, right? So this is the one that I didn't talk about, right? So we consolidated for a while. You use your black box, right? Use your black box just like this one. Connect the wicks and you wait. And you wait. What happened? It broke to the upside, right here, right? It broke to the upside with that candle. Let me zoom in a little bit. Yes, big and nice. Rocks upside the candle. What do you enter? Exactly as that candle when it bursts, when it breaks that one, right? So what it did was it went up. You are in profit. You trailed your stops, right? you trailed your stops. I told you they are the most critical. They are critical component. Okay, in this strategy, trailing your stop and taking out 70% of your profit is critical. Okay, how to trail that stop, we'll figure it out. Okay, in time, every skill will be polished to perfection, not perfection, but to near perfection, right? If you are focused enough, that will happen. That will happen. Not in an instant. It will take time, but we will make it happen. We will make it happen. So as you can see, you are in profit. You trailed your stop loss, and the market went up. You are in profit. This is a weekly chart. This is not a 1 minute chart. This is a weekly chart, which means each candle took 1 week of trading, right? So this is a profit right there. It seems simple. It seems little, but let's measure the TP shift and click the upside bullish. That is 1200 points right there. That's 1200 points. That is huge. That is huge by itself. And you trailed your stop, but the TP unfortunately was not hit. The TP is determined by using this one. Put it up there, right? A little bit up. That's exact. That's amazing. Exactly at the this is just a coincidence, but look at this. Exactly at the Fibonacci's resistance area. I don't know, it could be the 70% or something. But here we go. What happened? After hitting your stop loss because you trailed too close, you are in profit, you are out of the trade. What happened next? Came it came down, the price came down, right? It opened and started rallying up. What you gonna do now? You enter a buy, man. You enter a buy. That is the second buy. If the TP is not hit, if the TP is not hit right there, the TP will be hit. If the TP is not hit and the market rallies into that TP, that tells you that the market is going up to that TP, that take profit, right? That take profit. And I told you that wicks are going to be filled, right? The wicks are going to be filled. So what happened is that when it advances up, you are entering a buy because that is the second model. That's the second model. Go and watch my previous video on YouTube, please, I'm begging you, please. That will explain everything. Okay, that will explain everything. This will work for fathers, this will work for moms working from home, working for job, everywhere, wherever you are. It would take only 2 minutes or 5 minutes to determine your tip, to determine your stop loss, and just enter the trade once the criteria is fulfilled. Okay, once the criteria is fulfilled. So as you can see, it's a break and retest. What happened? Closed there, it retested and now went up, boom, to the upside. To where? To your TP, man, to your TP, to your TP. Once this is another profit right there. It went up, you enter a buy, and your 70% would be out. Where? When your TP is hit. Not here, not here, not here. Your TP is up there. What if we use the Fibonacci? If we use the Fibonacci, just like this one, your 2P would be short right there. It would be shorter. Let half of your TP, right? Half. So the Fibonacci is most of the time uh, it is not great when you measure from the consolidation zone. But if you include those wicks like this one, those wicks, as you can see, from the bottom to those wicks, the newly formed wicks, because it is a retest, right? Because it is a retest, if it is a retest, there is a pullback. That pullback is where the market is going to hit the discount area and launch up into the premium. So you want to measure from the highs to the lows, and the market will retrace to the 50%. That is the retest. You will enter when the market breaks the upper band, not at exactly the discount. No. That's not gonna happen. Don't do that. When the market retraces back, you wanna enter when the market breaks to the upside. This band has to be broken again. If it doesn't, and if it falls, that is a sign this is the third model. That is a single fake out. The third model will be in play once the lower band is broken. When the lower band is broken to the downside after making this will be the third model. A single fake out. You enter a sell, boom, to the downside, right? That is what is happening right here. It went up, hit our TP, we are out. We trailed our stops up to there. We don't even care if it retraces. We are out. We are in profit. Beautiful. Beautiful. As you can see, when I measured the tip of the wick to the tip of the wick this previous week, it is exactly at the point. So measuring, if it is a retest, you have to measure from the wick. So exactly the tip is hit. That's beautiful. Beautiful. More profit than this traditional one, right? After making that, what happened? It broke to the downside. Now what do? You enter a sell, man. You enter a sell. You enter a sell. That is the beauty of this strategy. The black box is great. If the market comes back to that consolidation, that is going to be a retest, or that is going to be a single fake out, or it will be a double fake out if the market comes back. Okay, as you can see here, it was a consolidation. It broke, then it came to the two retest, right? It retested and never came back. This is a real breakout right here. It's a real breakout. Okay, so you enter a sell. You in this time, what happened is your trailed stop will protect you, not your TP, because your TP will be this one, right here. Okay, the market could come down here because it never finished. It never finished this one, and I told you that wicks cannot be left alone. They are not left alone. It will not leave them alone. So what is gonna happen is the market will come down to cover this. If we are moving up, it will cover this a little bit and move up and cover this big move, big wick right there. If we are down, then the market will not come up. It will come down. And if the market now, it's a weekly time frame, right? So we are still in play. Our model is still in play. We are still in trade because still the setup is still in play. It didn't blow. The setup is still correct. Okay, our setup is still in play. So what we are going to do is wait for the market. What it's gonna do, right? If the market comes back up to this and falls down, falls back to this down, what are we gonna do? We are going to sell. We will be selling. What is that called? It is a break and retest. And the whole thing is called what? It is a force model. It is double fake out. That one and that one. Okay? I'm sorry, not a double fake out, still a single fake out. It will be a double fake out once this upper band is broken to the upside. Not yet, okay? If this upper band is not touched and the market melts down, it is still a single fake out. It's a third model in play. If the market rallies up making bullish candles and moving up and up and up. If it breaks this one, we will be buying. One, the week will be covered. Second, we have the fourth model, that is double fake out. This one, and this one. What is this? This is another second fake out. So it will be double fake out and we will enter a buy to the upside. If the market does this, tests this one, fills this week and comes down, we will be selling. That is called a single fake out, and we will be riding it until this TP is hit right there, down here. Okay, that is the next plan for BTC USDT. BTC USDT, let's go to the 2-hour time frame. So as you can see, the plan will be simple. The plan will be simple once you frame it on the higher time frame. Okay, once you see a consolidation on the higher time frame, you don't want anything. This could be a fake out, or this could be a real breakout and break and retest. Boom. That is the two scenarios that will happen. Nothing will happen other than this. Okay, it's simple as that. Simple as that. And we have a plan for both of them. For both of them. It was beautiful. I think I have talked a lot, and as you can see, there is another consolidation. Beautiful, boom, and your TP is hit, and it never stopped. Boom, boom, boom. It went right to the. If you had seen it on the weekly time frame, as I have showed you, that ended up being a single fake out. So you could have sold right there when that thing broke the lower band. Where I mean, yeah, this lower band. Where is it? I think it is this one. This one, and this retested it, and another sell. Boom. And that was a huge beep. Huge. That is huge. I don't want to think about this. That is 3,000 points just for identifying the consolidation. That's all. I think I have consumed a lot of time in this stream.